It has been a wild year beyond our wildest imaginations, with the COVID-19 pandemic racing across the globe, threatening the economy and humans. Corporate profits are down 56% since Q4 2019, but the equity market has fully recovered. A lot is at stake as we get the Q3 earnings, but even more importantly, we're having a US presidential election. And that is part of this special quarterly outlook. And we've looked at previous elections going back to 1896, so 31 presidential elections over more than 100 years. And our findings are quite interesting. So the US elections, they don't mean much for equities. We typically observe flat equity markets and then a rise post the elections, but it's mostly just due to some seasonality effects that we see these rises. But then, if we look at volatility, we observe around a 1% daily volatility or 16% annualized after US elections. And if we compare that with the current VIX futures that are pricing future volatility, we're currently looking at 30% and above implied volatility for that period. And that means that the market is really pricing in a tail risk scenario. We have only seen above 30% realized volatility in 3 election years, 1916, 1932, and 2008. So a lot is at stake this time around. If you look at the type of baskets and how you should position yourself as investors, if we get a Biden, we think it would be a negative overall for equities because he wants to increase the corporate tax rate from 21% to 28% and also increase taxes on intangible assets from 10.5% to 21%. So that would be a negative. But if you see a Biden winning the election, you should also buy green energy. That will be an industry that in particular will do well. If Trump wins, you should go with small cap stocks that have a domestic footprint. You should go with industrials, but you should also go with technology stocks, as Trump has shown that he is pro equity market and is pro the corporate sector, and the technology sector in particular will benefit from that. To read more about our quarterly outlook, go to analysis.saxo.